When most people hear the word investing, they picture someone glued to a screen, constantly picking stocks, trying to predict markets. But many long-term investors do something far simpler than that. They invest through ETFs. Now, ETF might sound like complicated finance jargon, but the basic idea is actually surprisingly straightforward. In fact, if you've ever heard people mention index funds, the S&P 500, or passive investing, you've already been hearing about ETFs without realizing it. So in this video, I'll explain what an ETF actually is, how they work in simple terms, why people use them, the risks beginners should know, and how they connect to long-term investing in the UK. By the end, a lot of investing terminology is going to make a lot more sense. So, what actually is an ETF? ETF stands for Exchange Traded Fund. Now at first that phrase sounds much more complicated than it really is, because underneath all the jargon, an ETF is basically just a collection of investments grouped together into one fund. That's the most important thing to understand. An ETF allows you to buy many investments at once through a single investment. So instead of buying shares in just one company, an ETF might hold hundreds of companies, or even thousands. Some ETFs hold large American companies. Others hold global companies from all around the world. Some focus on technology. Others track entire stock markets. And in the UK, many beginners eventually come across things like FTSE 100 ETFs, S&P 500 ETFs, or global ETFs that invest across many countries at once. And this is one of the main reasons ETFs became so popular, because they make diversification much easier. Instead of relying on one company succeeding, you're spreading your money across many businesses at the same time. A useful way to think about it, an ETF is like a basket. The ETF is the basket. The investments are the things inside it. So when someone buys one ETF, they may actually be buying tiny pieces of hundreds of different companies all at once. And this is one of the biggest mindset shifts for beginners, because a lot of people imagine investing as constantly searching for the next winning stock. But many long-term investors simply buy diversified ETFs and let time do the work. So how do ETFs actually work in practice? Most ETFs are designed to track something, usually an index. An index is basically just a list or group of investments. For example, the S&P 500 tracks around 500 large American companies. The FTSE 100 tracks many of the largest companies in the UK. And global indexes track companies from countries all around the world. So when an ETF tracks an index, its goal is usually not to beat the market. Its goal is simply to follow the market. That's why people often call this passive investing. The ETF is not trying to predict which companies will win. It simply owns many companies together and follows the overall market over time. For example, an S&P 500 ETF might contain companies like Apple, Microsoft, Amazon, Nvidia, Meta, and hundreds of others. And many UK investors also come across globally diversified ETFs, like Vanguard's FTSE All-World ETF, which holds companies from many different countries through a single investment. So instead of trying to pick just one company yourself, you're buying exposure to all of them together. And importantly, ETFs trade on stock exchanges just like normal shares. That's actually what the exchange traded part means. People can buy and sell ETFs throughout the trading day, similar to individual stocks. But underneath that structure, the ETF itself is still just holding a collection of investments. And again, this is why ETFs can feel confusing at first. Because an ETF is not one company, it's a structure holding many investments together. And once you understand that idea, the whole concept becomes much less intimidating. So why do so many people invest using ETFs? For a lot of long-term investors, the main reasons are simplicity, diversification, and convenience. Because instead of researching and managing dozens of individual companies, an ETF allows people to invest in many companies through just one investment. That makes investing feel much more manageable, especially for beginners. Another big reason people like ETFs is diversification. If you only own one company, your investment depends heavily on that one company succeeding. But if you own an ETF holding hundreds of companies, the risk is spread across many businesses at once. Now that doesn't remove risk completely, but it can reduce the impact of any one company performing badly. Many ETFs also have relatively low fees compared to actively managed funds, and over long periods of time, costs can matter more than many beginners realize, because investing usually works gradually. Small differences in fees can compound over decades, and honestly, one of the biggest reasons ETFs became so popular is because they simplify investing psychologically. A lot of people feel overwhelmed constantly trying to predict markets, but ETFs allow many investors to focus on what actually matters: long-term thinking, consistency, diversification, and patience, which is usually much closer to how long-term investing works in reality. Now, this part is important. ETFs still involve investment risk. A lot of beginners hear words like diversified, passive investing, or index investing, and assume that means ETFs are guaranteed to make money. They aren't. The value of ETFs can still go up and down. If stock markets fall, ETFs can fall too, and sometimes markets can fall quite sharply. That's one of the most important differences between saving and investing. Savings accounts are usually designed to protect money you already have. Investing is about trying to grow money over long periods of time, by owning productive assets like businesses. But that growth comes with uncertainty, and emotionally, that uncertainty can feel uncomfortable, especially for beginners, particularly during market crashes, recessions, inflation, shocks, or periods of economic uncertainty. But historically, many broad stock market indexes have generally risen over very long periods, despite crashes, recessions, wars, and financial crises along the way. That doesn't guarantee future returns, but it does help explain why many long-term investors focus more on decades rather than short-term market movements. And honestly, learning to think long-term is probably one of the hardest parts of investing psychologically, because modern media constantly encourages people to react to short-term movements, but long-term investing is usually much quieter than that. So what does investing in ETFs actually look like in real life? Usually, people choose a provider first. That could be an investment app, a bank, or an investment platform. Then they open an investment account. In the UK, many people invest through things like stocks and shares ISAs, pensions, or general investment accounts. After opening the account, they deposit money and choose the ETFs they want to invest in. Some people invest occasionally using lump sums. Others invest monthly automatically. And many long-term investors prefer monthly investing because it builds consistency and removes some of the emotion from investing decisions. Then from there, the ETF simply sits inside the investment account. Over time, people may continue adding money regularly, while the investment hopefully grows gradually in the background. And honestly, once you understand the basic idea behind ETFs, the whole system becomes much less intimidating, because underneath all the finance terminology, the core concept is actually fairly simple. So when you strip away all the jargon, an ETF is really just a fund that holds many investments together, allowing people to invest in lots of companies at once through a single investment. And for a lot of ordinary people, that simple idea completely changed how they think about investing. I've also got videos on how investing works in the UK and what a stocks and shares ISA is, so those are worth checking out if you haven't already. But if this video made ETFs even slightly less confusing, then it did its job. Subscribe if you want to keep learning, and thanks for watching.